Yeah. So good evening, everyone. Today is the second session of our audit and assurance. In this session, we are going to start chapter one as per the Kaplan books chapter sequence. The chapter is about introduction to assurance. From that chapter today, we are going to discuss the two things: what is assurance engagements or what are insurance engagements, what are the elements of the insurance engagement, means what are the minimum things that should be in an insurance engagement. Then we will discuss the types of assurance, like how many types of assurance are there, what are the differences in between those types. So we will discuss one by one. In our last session we discussed briefly discussed the whole audit from appointment till issuing of the audit report. We discussed that the auditor must meet the legal eligibility requirements. We discussed that auditor must meet the ethical eligibility requirements. Then we discussed that the auditor has to make sure that the preconditions are available or agreed between the management and the auditor. And then we discussed after the preconditions confirmation, auditor has to sign an engagement letter. That engagement letter must be signed by both parties, mean the company and the uh, practitioner, or we can say shareholder, not shareholder, sorry, company, sorry, auditor. And the next thing we said, after signing of the audit engagement, the next thing is the audit planning. The firm, the auditor, or the practitioner, or ACCA, or whoever is doing the audit, right? They plan their audit assignments. Because whenever you get a job, whenever you get a project, you plan that how will you execute it, how many members will be deputed on this client, who will be doing which area, all that stuff, all the planning. So if will there be any requirement to hire an expert, for example, if you have studied IS 19, the post-employment benefits, right? There are the contribution plans, gratuity, all that stuff. For those kind of things, you might be hiring someone from the market, the expert. So you that in that stage, in the planning stage, you decide, you make all those decisions. When you do audit planning, then during the planning you do risk assessment, like which areas are more risky, where are the possibilities of the misstatements, right? You identify, because the risks linked with the industry, the company. For example, if you are doing the audit of a tech company, right? So for the tech company, their inventory is becoming obsolete every day, because of technology is, because we can say that technology is emerging every day. New advancements, new inventions are there in the market. So whenever something new comes, the latest or the last model of the same thing competitor goes down very fastly. You can see when if we say in the 2 weeks ago, when Chinese AI persons, like they announced the DeepSeek, a competitor of Chat GPT, basically the same day or very next day, the share price of Nvidia went down by around 15 to 20 or $30 per share, I believe. So that is the impact of all this way, because whenever something new comes in the IT industry, the old or the competitor already in the market, the prices decrease very fastly. So inventory is a very risky area in the IT industry, because NRV adjustment, IS2 says you have to record your inventory at lower of NRV or cost, right? So at the year end, you have to apply the NRV test on the inventory in case of the tech industry or manufacturing, all that stuff. So based on the industry, you assess your risk areas. So on where the risk areas are very high, where the risks are very high, you appoint depute very experienced team members from your team. So I mean, this is the whole things we discussed yesterday. After the planning, after the deputation, they perform the audit procedures. Each member do their own part. For example, you are assigned to do the audit of the property, plant and equipment. You will be doing the whole audit of that area. You will be asking the client to provide you all the information and all that stuff. So that then we discussed about the audit report. Like at the end, we issue the audit report. So now today we are going to discuss the assurance engagement. What is assurance engagement? If you remember, yesterday I told you shareholders are the intended users of the financial statements. Financial statements are prepared by the management. So shareholders want to, like, because they have some doubts in their mind. Therefore, they hire an independent practitioner to review the subject matter, means to review the financial statements and obtain sufficient and appropriate evidence about those financial statements and express their opinion. What opinion? Give a opinion like, are these financial statements giving true and fair view? Are these financial statements are presented in accordance with IFRS or not? And we had this discussion yesterday. So now we are going to discuss the definition of assurance engagement as per the auditing standards. The same, if you open any book, you will find the same definition, because that definition is given in the assurance. Where is that book? Okay, because that definition is given in the auditing standards. So as per the auditing standards, what is assurance engagement? What is assurance engagement? Is an engagement in which practitioner mean auditor. Practitioner means auditor. Here, as of now, auditor. Auditor obtains sufficient and appropriate evidence in order to express. If you remember yesterday, I told you the whole objective of the audit is to, auditor has to make sure, auditor has to obtain. What is the objective of the auditor in this audit engagement, assurance engagement? Auditor has to obtain sufficient and appropriate evidence to enable himself that he could express an opinion on the subject matter, on the financial statements. What will be his opinion? Either he will be saying financial statements are giving true or fair view, or we can say financial statements are prepared in accordance with IFRS, or he will say financial statements are not prepared in the accordance of IFRS. To reach this conclusion, because to express an opinion, he must have sufficient evidence in his hands. So if someone question his opinion, he can defend it. He can say, okay, I'm saying financial statements are not prepared in accordance with IFRS. See, I have these documentation. I have these evidences. Therefore, the practitioner obtains sufficient and appropriate evidence in order to express a conclusion. Because whenever you are saying something, if the counterparty asks, what evidence you have to provide the evidence to them. To provide the evidence, you have to collect the evidence first. So you have to keep that in your files. We will discuss one chapter, audit documentation. And in that chapter, we will see that auditor document everything in his files. He keep those files in electronic form and in physical form with him for a specific period of time. That is required by the local jurisdictions. Understood? So they express a conclusion designed to enhance the degree of confidence of the intended users. What is the purpose? Who hired the auditor? Intended users. Who is the intended user in our case? Shareholders. What was the purpose? So the purpose was that the auditors review the financial statements and express their opinion. So the opinion will enhance the confidence of the intended users about the reliability, the credibility of the financial statements. Are these financial statements reliable or not? If auditor says these financial statements are giving true and fair view, means are prepared in accordance with the IFRS, it means this opinion is enhancing the confidence of the shareholders. Their credibility is increasing here. Understood? This is the purpose. That is the main purpose. Users, other than responsible party, because here, why they are saying other than responsible party? Responsible party is the party who prepared the financial statements. In our case, who is the responsible party? Management, board of directors, because though they are responsible for the preparation of the financial statements. Understood? So now here, subject matter and criteria we will discuss in the below discussion. So this was the assurance engagement definition. Any engagement in which a practitioner, means the auditor, obtains sufficient and appropriate evidence to provide or to express a conclusion on the subject matter to enhance the confidence of the intended user other than the responsible party. So every assurance engagement will have 5 elements. If you look into any assurance engagements, I will give you multiple examples. Okay, while when we discuss the elements, that will you will see every engagement has these 5 elements. What are those 5 elements? The first element is, in every assurance engagement, there will be 3 parties. What are those 3 parties? How can we identify? Let's see audit. If you refer to our previous yesterday's discussion and today's discussion so far, shareholders appoints practitioner to review, that means audit the financial statements prepared by the management. So 3 parties are involved. Shareholders means intended users who are going to use the audit report financial statements, right? Then the practitioner who is being hired to audit the financial statements. Third one, responsible party, the party who has prepared the financial information that is being reviewed by the intended user, practitioner. Understood? So in every assurance engagement, there will be 3 party relationship. The second example, in this example, what we discussed, the audit example, means the shareholders appoint auditor to examine the financial statements prepared by the management. So 3 parties, practitioner, responsible party management, third party intended user, which is shareholders. Now, tax authorities also appoint independent third parties. Okay. Why? So they can review the they can review the data of the companies and can express their opinion to make sure that companies have complied with the tax laws or not. There is a possibility. If a tax authority of any country contact with a firm like assurance firm, let's suppose PwC or KPMG, ask their tax team to review the financial statements of the company A, which were prepared by the management, and express their opinion, and like just tell them, are they complying with the tax laws or not? So here, who is the intended user? Tax authorities, because they have to use my report. They have to rely on my report. Understood? So here, intended users are the tax authorities. Who is practitioner? Again, firm with the practitioner, because they are being hired to give their assurance report, to review ensure that, to check the compliance of the tax laws. Then who are the responsible parties here? Who is the responsible party here? Responsible party here is again management, company's management, who have prepared the tax return and submitted to the tax authorities. Understood? So in every assurance engagement, there will always be 3 parties. This was the first element of the assurance engagement. Second assurance element of the assurance engagement, that is your subject matter. What is subject matter? Anything, any information for which practitioner is being hired, like if the shareholders are hiring a firm to review or audit the financial statements, in this assurance engagement, financial statements are the subject matter. If tax authorities are hiring the assurance firm to review the tax returns and compare with the financial information of the company, okay, in that case, tax return and the relevant financial information will be the subject matter of the assurance engagement. Means the information which is going to be reviewed by the practitioner and on which about which the practitioner has to express his opinion. That is basically your subject matter. In our AA exam, this whole syllabus, whenever the subject matter word is mentioned, it means they are addressing to the financial statements. Because in our syllabus, we have 2 types of assurance engagements: review engagements and audit engagements, right? In both scenarios, the subject matter will always be your financial statements. What are the review engagements? We will discuss later. But as of now, you just know that in our syllabus, we only have review engagements and audit engagements. In the review engagements, subject matter is financial statements. And in the audit engagements, subject matter is financial statements. Can you hear me clearly, right? I am not receiving any questions from your side. So I think if there is any confusion, any questions, you can ask. Any questions? All good so far? So people are saying, yes, sir, yes, sir. Okay, so we have around 10 students in the class. 3 are saying yes, rest 6 are, I think they should also respond. Say yes or no if they are clear or have any questions or doubts. Okay, understood. So our subject matter is our financial statements, which we have to review in our assurance engagements. Clear? Now the next element of our assurance engagement is suitable criteria. Means the criteria, the principles that we have used to prepare the subject matter. In our case, when we are saying subject matter is financial statements, it means suitable criteria will be my IFRS, right? Because why in assurance engagement, practitioner is being hired to review or audit the subject matter. If he does not know what is the suitable criteria which was used to prepare the subject matter, he will not be able to review or audit the financial statements or audit the subject matter and express his opinion. So there must be a suitable criteria in the assurance engagement that must be mentioned in the assurance engagement. If you remember, yesterday I told you there are some preconditions. I also revised that thing after the legal eligibility check, after the ethical eligibility check. You agree with management on the preconditions. The precondition in the one precondition is that they have to agree on a suitable financial reporting framework. That financial reporting framework is basically the accounting framework that management will use to prepare the financial statements. Understood? In our case, it will always be IFRS unless otherwise specified in the question. If they have mentioned that our suitable criteria is US GAAP, you cannot write your answer using IFRS. So you have to mention right answer according to the US GAAP. So this is suitable criteria, means the criteria that is used to prepare the our subject matter basically. Now next is sufficient and appropriate evidence. What is the objective of the auditor or the practitioner? Objective of the practitioner is to express an opinion, his opinion. As discussed earlier, to express an opinion, he should or he must have sufficient and appropriate evidences in his hand that he can defend his opinion in the future if someone questions his opinion. So for that purpose, he has to obtain sufficient and appropriate evidence. Once he has obtained the sufficient and appropriate evidence, he will issue or he will give his opinion, his conclusion. So how will he communicate his conclusion? How will he communicate his opinion? That opinion will be communicated via a standard assurance report in the form for the audit assignments. In case of audit, we call it audit report. For the review engagements, we call it review report. Clear? So it depends, because why it is called conclusion. For the review reports and other assignments or engagements, it is called conclusion. For audit report, we call it opinion. Clear? Making sense? Any questions from this so far discussion? We are good to go. So all clear, all good. So the next thing, so we understood, like in any insurance engagement, there will be these 5 elements. So they can ask in a multiple choice question, they can give a scenario, they can say which element is missing. So you have to identify. When you understood, when you have the understanding of the all the elements of the assurance engagement, and you will be able to answer the questions very easily. Now, next thing that we have to discuss is types of assurance. What are the types of assurance? Means in the assurance, auditors or the practitioner gives assurance. He expresses his opinion to enhance the confidence of the intended users. But what there are different types of assurances. There are different types of opinions, basically, or conclusions. The way the conclusion will be the same types. There are conclusions are not of different types. Basically, the way he communicates his opinion or his conclusion, that divide the assurance into different types. You know, to say that this information is 100% correct, you must be, because you then it means you can only say that this information is 100% correct when you are 100% sure, right? You have checked everything, single invoice by invoice, transaction by transaction, that you have checked every single penny of the whole financial statements, all the information, all the data. Then you will be in a position to say say that these financial statements are prepared 100% in accordance with IFRS. They are 100% correct. But you cannot say that. You cannot say that. Why? Because IFRS allows you to make some judgments, make some assumptions. So in your profit and loss statement, in your income statement, there are some expenses which are booked based on the using different estimates, different judgments. For example, depreciation expense is your estimated expense. You cannot give 100% guarantee that your depreciation expense is correct and your asset has like uh, uh, lose its value with this much amount. You cannot say there is 100% surety or guarantee. The same way, you in the IFRS 9 ECL model you apply, you record the provision for doubtful debts. So that is also estimated expense. So it means your profit and loss statement is not 100%. You cannot give absolute assurance on that. Understood? So we give two types of assurances. The one, reasonable assurance. The second one, limited assurance. The reasonable assurance is your high level of assurance, but is not absolute assurance. High level of assurance means you are saying up to the maximum level you have checked the financial statements and you are pretty much sure that these financial statements are prepared in accordance with the IFRS in all material respects. Why it is material aspects are there and why we are giving reasonable assurance? Because see, for a company, operations are like efforts are prepared using the company's whole year's data, and the audit assignment is for only 1 and 2 months. So you have to review the audit, all the financial statements, all the data in 2 months, and do everything and then issue your report. So it is impossible to complete this whole assignments with the 4 to 5 members team and do 100% accuracy check and all that stuff and give report. That is why you decide to go with sampling. We check, we perform audit, we verify transactions using different sampling methods. For example, in the revenue, there are 1,000 transactions during a year. We will only check, for example, 50 transactions, 100 transactions, or 120 transactions. So based on that samples result, we will make some conclusion. Yeah, these 120 transactions are 100% correct. It means rest are also correct. When you are using sampling method, just because of time limitation, cost limitation, or multiple inherent factors like assumptions, estimates that we use in the financial reporting, accounting. So that is why you cannot give 100% assurance. But in the reasonable assurance, the audit engagement, you perform very detailed procedures. You assess the risk, you increase your sample size, you perform very detailed procedures to get sufficient and appropriate audit evidence that enables you, that like makes you that makes you in this position that you can give a reasonable assurance, means high level of assurance. So in other the second approach is your second type is your limited assurance. In this type of audit engagements, you do not perform detailed audit procedures. You do not go into much details. You perform very few procedures, that like analytical procedures comparing with the previous year results and then for analyzing the stuff, means analysis, etc., and doing some sort of reviews and discussion with management. So in this case, you are not getting sufficient and appropriate evidence for the reasonable assurance. So you provide the limited assurance. How will you differentiate between the reasonable assurance and limited assurance? In the reasonable assurance, when you express your conclusion, when you express your opinion's wording is with the positive mindset. You are saying that in our opinion, these financial statements are prepared in accordance with the IFRS. This means you are, in your opinion, you are giving opinion that these FS are prepared in accordance with the IFRS in all material respects. But when you give a limited assurance report, you will not say this way. You will say that nothing came into our attention that causes us to believe that these financial statements are not prepared in accordance with the IFRS. Here you are still saying that there is no misstatement, but the way you are communicating your message is with a negative approach. You are telling the reader that, you see, I have reviewed it, but during my review, whatever I have reviewed, nothing came into my attention. Okay, but it means there are chances that there could be mistakes. Why he is communicating in this way? So he could save himself, he could defend himself, that I have communicated it to you that whatever I have reviewed, nothing came into my intention, but it was giving you an indicator, that hint that there could be some mistakes, there could be some misstatements. So let's read that report. There should be something. Yeah, okay. So how is it reported in the opinion? See, in our reasonable assurance, we express opinion positively. See how, in our opinion, the FS gives a true and fair view, or we can say present fairly in all material respects. So SOFP and prepared with in accordance with the IFRS. But when we give our conclusion on the limited assurance assignments, we say nothing has come to our attention that causes us to believe that the FS of Murray are not prepared in accordance with the IFRS. See, we are saying the same thing, that there are no mistakes, but the approach that we are using is totally different. Here, whoever will read this opinion, he will be happy. He will be okay. Yeah, this person is giving a good assurance. He is like increasing it will increase the confidence of the intended user. But whoever will read this opinion, this conclusion, he will be like, okay, he's saying nothing is there, but he's also indicating that there could be something as well. Understood? So this is basically my assurance types. So in my reasonable assurance, I obtain sufficient and appropriate evidence for a reasonable assurance. Because when I am saying to a high level of assurance, I am giving you a high level of surety that these FS are giving true and fair view. So therefore, that purpose, I need to obtain high level of sufficient and appropriate evidences as well. I need to perform detailed procedures. I need to obtain different types of audit evidences to support my opinion, because my opinion is giving a high level of assurance. So whenever I'm giving high level of assurance, I have to obtain multiple thorough procedures, which is also mentioned here as well, right? I have to perform the detailed procedures, okay? Inspect the documents, review the documents, then cross-check the documents, get the confirmations or the verification from third parties. That will make me in that position that I can express a high-level assurance opinion. But when we talk about the limited assurance, in that case, we will not be going into that much detail. We will only be doing some procedures. We will be just inquiring the management. We will be asking them, okay, so when we ask them, okay, why it is increasing, they will say, this is the reason, that is why it is increasing. We will say, yeah, it is fine, there is no issue. Okay, this is the main difference. So between the reasonable assurance engagements and your limited assurance engagements. When we will further discuss all the audits and all that stuff, the chapter and everything, then you will understand the more better way, because it's just a beginning and we are discussing the audit right now. So at the beginning, this becomes a little bit confusing. But when we will move forward, discuss the whole subject in detail, step by step, things will become more clear to you. Understood? Any questions from the so far discussion? So basically, types of assurance are two. This is called your reasonable assurance, when you give reasonable assurance, and the other is your next one is your uh, limited assurance. So the audit engagement is the types of engagement in which you express your reasonable assurance. Okay, and then the review engagement is basically your type of assurance engagement where you express your limited assurance. You give your conclusion in a with a negative approach. These are both are types of the assurances, but in a different perspective. If you see, both are linked with each other. In audit, we perform detailed procedures, but in review, we only quickly review the financial statements, perform the major main analytical procedures, and then we inquire the management about their decision and all the stuff, and we get our sufficient evidence to give our limited assurance opinion, means the review report. So for the audit report, we need to prepare, so we have to perform the detailed audit procedures so we can get our financial statements audited, and we can obtain sufficient and appropriate audit evidences for that purpose. I think I'm clear, right? So anything else? Anyone else? Any questions? Any questions? All good, huh? Okay. So there are some limitations of the, so from before the discussing that, there are different types of audits. Okay, they're called external audit and internal audit. External audit is basically your statutory requirement that is required by the local laws. Wherever, if you are sitting in India, if you are sitting in Pakistan, if you are sitting in any country, okay, every country has its local corporate laws, company laws, business laws. They require the companies to be audited by the assurance firms, the auditing firms. So that is called external audit, when a company hire an external party, independent party, to audit their financial statements and give opinion on their financial statements. That is called your external audit. Then next is your internal audit. Internal audit is basically internal department. For example, when companies grow, and there that like becomes very difficult for the owners, for the shareholders to keep their eyes on everything and monitor everything. So what they do, I think someone's mic is on.
Oh.
Actually, can mute your mic, please.
Or,
it's fine. Okay. So what were we discussing? Yeah, internal audit. So what they do, because they hire different managers who are running their businesses, taking their decisions. So it becomes very difficult for the shareholders, owners, to keep their eyes on everything. So they establish standard operating procedures. They established internal controls, internal policies. That means the job descriptions, that every person has to follow those regulations, those procedures, those policies. So these are your internal controls. Now you have to make sure that everyone is following those policies, those SOPs, those standard operating procedures. So to ensure the compliance of those internally established policies, companies establish their internal department. They hire 3 to 4, 1, 2, or 3 or 4 multiple individuals, depending on the size of the company and what is the job of those individuals. Job of those individuals is to just to audit the internal documents. Okay, they can review the documents done prepared by every department, because every department has its own. For example, for the cash payment, the accountant has to prepare the cash payment voucher. That has to be prepared and checked by the accountant. Then there is the finance manager. He has to check and then approve that payment voucher. Okay. After his check, then it will be signed by the CFO or the other authority. These are the standard operating procedures. So whenever some a company is making any payment, that has to be reviewed and gone through three different persons. So nobody can do frauds and all that stuff. These are the SOPs, standard operating procedures. What is the purpose of the internal audit department or internal auditors? They will be doing some audits. They will be checking they can ask the finance department to give them all the purchase invoices recorded in this month. They will review, because whenever you are recording any purchase invoice for the material, that must be supported by the GRN. What is the GRN? Good receiving note. That is signed and prepared by the store department. Understood? So that this all these things are your standard operating procedures. What is the role of the internal audit department? They review all those documents, they prepare their reports and present to the senior management, mean the directors or the CEOs or the shareholders. Not the shareholder, basically board of directors and CEO. This is the purpose of the internal audit department. So when we say audit in our AA or AAA exam, we will always be talking about the external audit. When shareholders of the company hire an assurance firm or audit firm to audit the financial statement of the company. This is your external audit. If we go here, this is where we discuss the external audit engagements. In the external audit, if you remember, I just told you the audit. This is the example of the reasonable assurance. In external audit engagement, the auditor provides the reasonable assurance. Understood? That is already discussed. Any question from so far discussion? Okay. So I think there is only one person saying clear, sir. Rest. What about rest of the students? All clear? Okay, good. So when we talk about the external audit, like in our accounting, we have accounting standards that guides us to do the accounting of any specific transactions. For example, if you are entering into a lease arrangement, you are hiring an equipment or building or anything on rent for a long period of time, IFRS 16 guides you to do the accounting for the such leases, such transactions. When you are buying any building, any plant and machinery, then IS 16 guides you to do the accounting of that specific transaction. The same way, there are auditing standards that guides the auditor about how to perform the audit of the any company's financial statements. So there are different auditing standards. There are different series like accounting standard. Those are the codes. The same way, auditing standards also has a coding system. So in the auditing standards, there are the 200 series, like ISA 200 series, means from 200 till 210 or 15 or whatever that is. Then the next one is ISA 300 series, 300 till 330, I believe. Yeah, 330. Then ISA is 400 series. Then ISA is 500. ISA 600. ISA 700. And ISA 800. Okay, so the first series of 200 standards is basically about your initial planning, acceptance, and all that stuff. If you remember in our previous session, we discussed about the preconditions. Those preconditions are written in the 200 audit standard series. Then we discussed about the audit engagements, the engagement letter, what should be there, what should not be there, what is must to be included. All those things are mentioned in these standard requirements. Clear? Then The ISA 300 series is about the audit planning. It guides you, it provides you the guidance how to plan your audit engagement. Then it provides you the guidance on how to select your materiality, how to identify your risks, significant risk areas. What is the risk? Means the risk of misstatements in the financial statements. Okay, the 300 series guides you about the your audit planning, risk assessment. Then 400, 500, and 600, these all together provides you the guidance on how to execute your audit, how to perform multiple different procedures and get your sufficient and appropriate audit evidence. Then the 700 series is for your audit report. It provides you, it gives you different situations, different situations where then how to express your opinion on in those situations. Understood? If you remember, in if there is something important in the financial statements, then you want user to must read that in the notes, right? Then it guides you how to communicate that important factor, important note in the audit report. There are different standards in the ISSC 700 series that only guides on the audit report. What should be included in the audit report, and what and when to be included in the audit report is mentioned in the ISA 700 series. Then ISA 800 series is regarding your special consideration. We will discuss in detail. Understood? So when we are saying ISA 200, it starts from the ISA 200. So ISA 200 basically guides you about the overall objective. It gives you the overall opinion, overall overview of the audit, like what auditor will be doing in all the overall audit engagement. Understood? The overall objective of the auditor. So what if you remember, we discussed yesterday as well, the overall objective of the auditor is to conduct the audit of the financial statements and obtain sufficient and appropriate audit evidence to enabling himself to express an opinion whether financial statements are presented fairly in accordance with IFRS or not. Understood? Clear? It's the same thing. So auditor has to express an opinion. For expressing an opinion, he has to obtain sufficient and appropriate audit evidence to support, to back his audit opinion. If he does not have that sufficient and appropriate audit evidence, he will not be able to express the opinion. He can still express the opinion, but he will not be able to defend his opinion if some question arises in the future. So the objective of what is the overall objective of the auditor? To obtain sufficient and appropriate audit evidence, enabling himself to express an audit opinion on the financial statements. Opinion will be on the two ways, because if you remember, in assurance engagement, reasonable assurance engagement, we in the audit engagement, we provide reasonable assurance. And in case of reasonable assurance, our opinion approach is a positive approach. We say that in our opinion, financial statements are presented in accordance with the IFRS, right? Or financial statements gives true and fair view in all material respects. So this is the overall objective of our auditor. Any discussion, any question from so far discussion? All good? Okay. So as you say, we are using the word true and fair view. We are saying presented fairly in accordance with the IFRS. Clear? So if you remember, in your accounting basic assumptions, basic principles, they require from you that you have to make your financial statement should be presented fairly. They should be giving true representation, comparability, consistency of the policies and all that stuff. So when we are using the word true and fair view, it means we are saying the financial statements are giving the correct informations and which is in compliance with the accounting standards. Making sense? That's what we are saying. Then fair means it is impartial and unbiased. If you remember, when you studied the accounting, basic accounting, you studied some assumptions, some principles, that financial information must be fair, represented, comparable, uh, truthfulness, periodicity, consistency of the accounting policy, all that stuff. When we are saying that it is giving true and fair view, it means we are saying these financial statements are complying with all those accounting principles. Understood? So this is just our today's discussion, and from the next session we will be discussing more details. We will be discussing the limitations of the external audit. Why we cannot give the absolute insurance? We discussed that today as well. Then we will be discussing how the auditing standards are formed and all that stuff. After from chapter 2, we will be entering into the preconditions, ethical requirements, and then legal requirements, then audit engagement letter, etc. If you have any question from the today's session or from the yesterday's session, you can discuss, you can ask. I will address your questions.